They earlier we went over how to calculate the items. We mostly talked about the application forms themselves, and we also discussed both basically the accumulations form and the payroll registers form and how to use those two forms to get the information you need and how those things interact with the tables in Schedule A, etc. In today, what we've done, partly because we're lazy, for our own purposes, we created a few custom reports that we wanted to offer out to the wider community. I appreciate it. Thank you for those of you who are on this call that have already purchased this. When we did the earlier presentations, we did a planning report so that you guys would understand and be able to plan ahead on how much that was going to be for, and these follow-up reports, which we have now for the loan forgiveness application. Those, of course, are included as an update to those earlier reports, along with all of our current understanding of the SBA requirements. For those of you who purchased the COVID reports earlier and were waiting for the forgiveness application to see if this was going to make sense for you guys, this is priced in a very similar way. The price of this is based on active employees because this is a payroll related form. We wanted to be able to make this accessible for everybody and also make it so that it was the more you getting forgiven, the more that it was able to be, you were able to afford this. We are pricing this currently at nothing. It's always been $14 per active employee. We do have a discount option for those of you who have IT staff and understand reporting and how to set up the reports, and also do not need consulting on the filling out the forms themselves and making sure that the tables match to the tables and working through the loan application forms as it relates to these reports. We do have a discount option of $6 or it comes out to $8 per active employee. If you're interested in these reports but you don't need our help setting them up in your system, we can just send you a zip file of these reports and you guys can install them yourself. Both of these options do require any updates we make to the reports in the future, and also any follow-up emails and follow-up support. So this is the $14 per employee includes the reports I'm about to show you. It also includes these install and training on how to use these reports and any support as you attempt to fill out your loan application form, whether that's now or whether that's at the end of your 24 weeks. As additional guidance comes out from SBA as it affects anything, especially any kind of COVID related things, then we will update these and update it on your system. Also, as a thank you to all of you who have purchased the COVID reports, we wanted to offer that if you have increased your employee count since then you can use the lower of the employee count when you purchase the COVID reports or your employee count now. So as a little discount and a thank you. I appreciate all you guys coming back. Those of you who are on the webinar today, I know a lot of you, and I appreciate all of the work that you've done to even make these a possibility, the questions that you've asked, and the amount of time that you've spent helping us, especially those of you who purchased the PPP reports originally, helping us work through in the installs and understand what we need to do to make this a reality. So for today, the investment that you're looking at is this $14 or the $8 per employee for what I'm about to show you. I hope that some of you will find this useful. Certainly, we've been able to find this useful for our internal items. So I'm going to jump straight into Vista here. And I did show you guys briefly this report earlier. But what we've created, and I'm going to go back to the main menu here. Close out from the earlier that we have the two reports. So the original report that some of you have is the wage breakdown. We also have the vendor invoice list. So many of you have seen these. So those of you who have purchased have seen these already. The wage breakdown report was a planning tool for the wages. The invoice list is simply a list of all of the vendors that we can use. So if all of the vendors, let's just say through 6/20, if that's our period. and it gives us the vendor and the AP reference based on the checkbox that we have in the vendor itself. So these two are existing lists, and this in particular is used to fill out lines 5, 6, and 7 on the schedule, depending on whether you're doing the easy or not, for your mortgage interest, your rent, and your utilities. So basically, it just says, hey, this is there's a UD field which we teach you how to use, and we install that and it says, okay, runs that. Very simple report, and it just simply makes it slightly easier to add up on the individual AP line whether or not you have that, whether or not something is available, and it works well in the case of documentation for an audit. But the real work that we've done after they released these forgiveness forms is in the PPP wage tracking Schedule A, and what you see here is, oops, I'm sorry. On this launcher allows us to go through and check a few things right off the bat. This is a standard crystal report that we've built. There's no magic necessarily that's happening here. We built a crystal report with a stored procedure to match with a few tracking fields that we'll go through. We allow you to run it for any company on your system. You can set the payroll group here if you'd like to have individual payroll groups, or you can leave it blank for all. You set your beginning PR end date and your ending PR end date. Like I referenced in the earlier conversation, we're going with the assumption that you're going to use the easier of the two methods, which is that you're going to advance your PPP forgiveness or as the application date to the first day of your new period, so that you can have a clean payroll and beginning and ending date. If that turns out to not be true, we can show you in the consulting of how to still use these reports to find the percentage of the beginning and percentage of ending that you need. In most cases, you'll be able to do this. The earnings limit here is a filled in field. Now what we've defaulted this to is 46,154. And the reason we calculated this was this 46,154 is simply 100,000, right, divided by 52 weeks in a year and multiplied by 24. And we get to the 56,153.84. And the SBA has rounded that for us. And so this is our earnings limit that is allowed for the full limit. If you're using a different term, you're using the alternate period, the 8-week period, that's the $15,000 limit. And if you're using something else and after you've talked to your CPA and found out that you can use something like 16 weeks, like we discussed in the very beginning of the first webinar, you can type in a different limit there. This is the limit that we're going to be using by default. So if I wanted to do this for 8 weeks instead, then to calculate this, we're going to do 100,000 divided by 52, and we're going to multiply that by my 8 weeks, and we're going to say, here's my new limit, 15,384, and I can put that in there. Showing the detail just shows the detail per employee, which I have checked into by now. And then we get into our 3 FTE safe harbors. So this was the safe harbors that I glossed through briefly on Schedule A worksheet. You'll find these on page 4 of the loan application. Schedule A worksheet, page 4. This is actually Safe Harbor 2 is on there on the page 3 lists them all out. If you did not have a reduction in hours of salary, you simply check this, and then you do not have to enter. The report will not calculate your FTE reduction. If you qualify for Safe Harbor 2, you can just check this, and then they're the same thing. The Safe Harbor 2, same thing. If you qualify for that, just check it, and then the reduction will not show on this report. So any one of these 3 that is checked, and the reduction will not be calculated on the employee level. You also have to put in a reference FTE, and you enter in the owners. So in this case, maybe we have the owners as employee number 1 and employee number 22, and we calculate it. We basically calculate the based on the 2019 owners for what we call Table 3 in this report. So when I run this, I get this report here. So let's walk through this slowly. First of all, the first step that we have is Table 1. Table 1, if you'll recall from the PPP Schedule A worksheet, is the employees who received compensation less than or equal to 100,000 in all months of 2019. These are the people who received less than 100,000 and therefore are subject to wage reduction restrictions. We may have to reduce their wages or reduce the amount of forgiveness because we reduce their wages if we haven't met one of the 3 safe harbors. Just like on our spreadsheet that we're providing, we have our earnings and our allowed earnings. You can see here that all of any earnings and the earnings codes, this is simply the earnings codes from the payroll departments, listed out here, whether or not they're allowed. Then we have the medical insurance, dental insurance, and IRA match, and we have these two. In this case, since there's no COVID earnings, it's simply the full amount of the medical and dental. And then in this case, Hillary Ponder has an IRA match of $154 in retirement. This, if you'll recall, there was owner, so there was no SUTA, et cetera. We also have an example here of Skylar Bovis. Now, Skylar Bovis is showing up on this report. Now, there's no detail here, even though on this we said show detail. Why is there no detail? The reason there's no detail is because Skylar is an example of somebody who was laid off, and we sent them an offer and said, please come back to work, and Skylar refused, and we can document this. And so we've put him in, we've overridden on his employee record. If I go to programs and I go to the employee record here, and I go to employee number 4, we've overridden the FTE down at the bottom to PPP override FTE. This is an override field that we provided. You can see as a UD field because it's italicized to 1.0. This does not count against us. In fact, it counts for us when we're doing our FTE calculations. And so Skylar shows up here for the purposes of calculating our FTEs only, even though he doesn't, of course, we don't get to get any money back for him. So we allow for that. You can see here we've also done this in the case of that's an interesting one. His name is Case Soren. He was a part-time worker where this also happened. We offered him his position back and he declined, and so we get to count him as a 0.5 of a worker for our FTE calculations, which helps us. In the case of Amber Segmont here, this is a very similar situation. They have the salary. There was a big bonus that Amber got. We had medical and dental insurance. There was an IRA. There was the SUTA for the state of Oregon here, and everything calculated out. Now, in box 3 of the table 1, and maybe it's useful if I pull this up so that we know what we're referring to. This is my Schedule A, box 1 here. So Schedule A worksheet, table 1, employee name. We're talking about this box 3, salary and hourly wage reduction. When we're talking about the salary and hourly wage reduction, we provided those calculations in that spreadsheet. This information shows up here. What was the average wage? What was the average wage? So during the cover period, 2020 to 2020, and this is pulling off the accumulations table. You can see here that in Amber Segmont's case, the earnings per hour during the cover period was $41.57. And the main reason for that was because she had a bonus. So the average wage rate was higher because of that bonus during this time. And therefore, there is no wage reduction. And so when we bring this up, this wage reduction field, which is this reduction column here, is 0. We do not have to reduce your wages by this amount at all. Next, we go to somebody who did have a wage reduction. So let's just keep flipping through here, and we can see here that Joanne Ashburner has a wage reduction. This is the same example that I used in my spreadsheet. We see here average wage during the covered period based on the hours is $27 an hour. Average wage in the first part of this year was $39 an hour. So possibly Joanne got a bonus, possibly Joanne worked prevailing wage with a lot of overtime. There's many reasons that Joanne maybe had an average wage that was higher in this period. And you can see here, I mean, this could easily be something like overtime, especially if you're cashing out the overtime on your prevailing wage, and you don't have your fringes set up correctly. Well, I shouldn't say correctly. You don't have your fringes set up to not restrict the amount of overtime that you're paying, but that somebody could easily, if they were working a lot of overtime, they could get to that. They could get to that point. If during COVID you said, okay, well, we're going to keep everybody on board, they're all going to be full time, but we're not paying any overtime out because we don't have enough work, then it could have dropped down. And in this case, we're at 69% of the earnings. And this is 1C during for those of you who are calculating that out. This is part of the form itself. In this case, it calculates our 75% because we can reduce it by up to 25%, right? That's the law. The law allows a little bit of a reduction, just not a lot. In this case, we are $2.27 under that 75% reduction. And then we take our hours per week, how many hours they were working. You can see that Joanne was working quite a few hours. And so we have to take this difference, $2.27, we have to multiply by the hours per week, and we have to multiply the number of weeks that we're applying for, in our case, 8 hours. And then we get this wage reduction. This wage reduction is shown here in the detail, but it's just brought up here in this folder here. And then we calculate the FTE. And the FTE in this case, she is a part-time worker as of now, and it's just been calculated for us unless we've gone in and overridden that. Similar to Joanne Ashburner, we have the situation where we have people who had COVID. So if I didn't go far enough here. Here we have Gardner Lashmer that had caretaker and family leave. So there was earnings that they had during the covered period, but there was also a lot of earnings as they took time to care for their children who were no longer in school because of COVID. And you can see here we have those hours that are associated with those earnings codes. There was also a small bonus during that time, which impacted this. But we've reduced the medical insurance that we paid out. Rather than taking the full amount of medical insurance, we've reduced it by the percentage of hours per pay period, like I showed how to do on the earlier spreadsheet, so that we only have the medical that is allowable here. In this case, the earnings weren't reduced. There was no wage reduction, but we can't take the full amount of the earnings. You can see here the 3,400 of earnings, only 1,300 is allowable for forgiveness. Now, if I run this again without the detail, then you can see here that it gives me a nice clean table 1. And all of this information then can be entered in directly onto, in this case, table 1. We enter in the employee and the Social Security information, all of this information and the FTE requirements. Table 2, so here we have specifically Lon Lonnie and Sandra Uttermeyer. So these people received more than $100,000 in 2019. And the main benefit here is that this reduction is always going to be 0. We can reduce their wages without penalty. And so we would like to have as many people as possible in this. If we go back to the report as it was run earlier, and we look at people like Lon Lonnie, Here's table 2. So here's the table 2 summarized. Here's table 2 with it expanded. You can see the calculation that we've come to say why Lon Lonnie is here. And you can see January, February, March, this is coming off the PR accumulations table. And we've put an asterisk by any month where its annualized wages is more than $100,000. So in this case, the $8,333 a month. So there was a bonus in May, or a bonus and bonus in December, or possibly there was overtime anytime that any single month that was over that period. Now, when we were understanding this report, we ran into a bit of an issue. Specifically, the law says less than or equal to 100,000 for all pay periods, and we have pay period information. That's not the issue. We can calculate that based on pay periods. But what the problem is that there's many times where people don't have the individual pay periods don't add up. This is especially true for things like Christmas bonuses, and it's also true that there's people who receive a check at the beginning of the month on a monthly payroll, and they also receive a weekly check based on 2 different pay groups, that kind of thing. As you guys know, there is as many ways to set up the payroll module in Vista as there are companies that use Vista. And all of those have a little bit different way of doing this. We've abstracted this, and we believe that this is an appropriate way to do it. We've said anybody who has more than 100,000 on the accumulations table for an annual earnings in order to come out to that. There's a possibility that you would want to dig into this, and we would certainly help you do this. And if you buy this report and we're supporting you, to say, well, I have somebody who's right on the edge. Is there ever a time, if one single bonus run or week, where if we multiply that week by 52 rather than this month by 12, that they would come up over 100,000, and we could help you show you how to do that. In this case, though, this will catch 98% of the cases where somebody's paid more than 100,000. So we calculate this, and it just puts them in table 2. Here we have our table 2, and we have our totals. And then we can put in our Schedule A worksheet information here. So this is pulling directly off of those tables. This is table 1 information. So if we go back to our details, so it's all of the information from table 1 employees is going up in line 2, 1, 2, and 3, including, you can see our salary wage reduction for Gardner. And we also have our box or table 2 totals here. We also have our totals from both table 1 and table 2 on that report, which is the employee health insurance. And in this case, this is already reduced for any COVID earnings. So this is the sum total of all of our employee, less what we've already taken for COVID. This makes that easy. We can also substantiate that using the COVID reports or our COVID spreadsheet. But this is just based on the number of hours. The amount that we've already taken is not included as part of what we're asking for forgiveness. Then we just do the employee retirement plans and the employee compensation for, the state and local taxes for employee compensation. This is just the lines 6 through 8 on Schedule A. Any compensation to owners, if there is any, and that's just that parameter that we're passing in, and any the total payroll costs. So we calculate this total payroll costs for you based on everything. And the idea is that, as you guys know, that there's lots of interesting scenarios. You guys may have multiple groups. You might have a person in 2 different groups for whatever reason. We wanted to provide all of the details of our calculations here for you. One of the things that you'll see, for example, if we go back to the person who has COVID caretaker, when you hover over the medical, you can see the calculation 93.9% of 416. So this was the amount that was allowable here for Benji Claire, because there was a little bit of COVID caretaker wages. So the idea of having this detail is so that you can prove these things out yourself. There is anything that is allowable here and also allowable under COVID will be reduced by that amount. This does assume that you set it up with the viewpoint recommended. That's an interesting way of saying it. Viewpoint recommendations for this. So I'm going to pause.
Questions.
Yeah, go ahead.
First one is on the launcher report. So if somebody has, that's from George White, he said if we have 3 payroll groups and you want to exclude one, is there a way to get that all in one report?
Oh, that's an interesting question. Currently, no, although I would guess that would be a fairly easy change. Right now, George, if you want to exclude one, you would have to run this for 2 different groups and add those up. But what I can do, if I'm going to write this down here, and that's a very easy change, just like we were doing for the owner when we pass in a comma delimited file. We can pass in a comma delimited here if that's something that you'll need. So basically, just type in 100, 200, for example. Currently, though, that's not the case. We would be able to get that for you for sure.
All right, and another kind of tied is that medical, can dental insurance be brought into that?
Yes, actually, you can see this here. Medical and dental insurance are both provided for under the law, and there's a few others that are as well. SBA FAQs have a lot more information on that as far as what is allowable and what isn't, and we can walk you through that if you buy these. But you can see here that both medical and dental are provided for. In these cases, so you can see here for Sherry and Milbourne, they have medical and dental, but it's 100% because there was no COVID earnings. Both of these particular things are eligible under COVID. And so even though Benji Claire had it, you can see it's only 93.9%. Good question, Sean.
And another one is the report to compute that average FTE for the borrower's chosen reference period, line 11 of Schedule A.
Line 11 of Schedule A. Let me pull that up here. So we have line 11, average FTE during the borrower's chosen reference period. Yeah, so this report will do it. That's a good question, Sean. So if we pull, let's do this here. Go to the end, then back a couple of pages. So you're saying for the chosen reference period, here at the very end, we have our average FTE, and this is so you could run this report for a different reference period. I could run this report for, say, 2019, and I could use it to calculate my average FTE. I could use it to calculate my FTE for the first quarter of 2020. But this will do that math for you. So yes, we intended that this report would be able to calculate FTE both during the chosen reference period, which is what you're going to get by default here, right? Because all this other information is regarding the chosen reference period, but also for any other time periods. Self-insured and therefore not charged a set fee per employee per month. Any advice on how to present our insurance expense? Janet McDonald, yes, I have advice. My first advice is that you should look into setting up a liability code with an hourly dollar amount that can be expensed to your jobs. And this has nothing to do with the PPP, but that's always my advice because it would allow you to job cost that portion. Now that is just an estimation, but what I've seen people who are self-insured do on this is they've estimated the cost of their self-insurance on an annual basis. They've assigned that as a dollar amount. Sometimes they've divvied that up to a family, similar to the way that would be if you were purchasing health insurance for everything, where they have a family rate, a single rate, etc. And they accumulate that on the balance sheet as a liability, and then they pay out of that liability, and then they reconcile that once a year, or once a quarter, however often they choose to reconcile that. The benefit of that is that gets costed to the jobs, and you see all of that as a cost because it is a true cost to your jobs. It is a true cost everywhere, and you set that up as a liability. If you've set that up as a liability, as an hourly rate, then it's really simple. It's just going to show up here on your medical amounts. If you're not doing that, which I assume you're not, based on the fact that you're asking the question, where you're not charged a set fee per employee per month, the SBA and the FAQs has allowed for you to allocate this in, I think, if I remember the words right, a reasonable method to your employees. And so if you haven't already gone and done this reimbursement to as an hourly rate, then it probably isn't going to impact your COVID. I'm thinking this through. Excuse my hesitation here. No, that must be true. You wouldn't have been able to calculate for your COVID pay, so it won't impact you there, most likely. I would have to understand fully. In which case, you could take and find a reasonable way to say, these are my costs, my expected costs for a year. These are my expected hours for a year, and put that together to be able to say that for this employee, my expected costs are $4 an hour, and multiply that out. This column that you see on my report here would show as $0 in that case, but you could still use the Vista reports to calculate that and pull it back in and actually put that on, let's see here, line 6 of PPP Schedule A. Really good question though. Okay, any other questions before I move on? One of the things that people have asked about is this owners thing. And I'm going to read this for you. And this is how we've implemented it here on the report that you see. The compensation to owners, this is PPP Schedule A, line 9. We have total amount paid to owner employees. And this may not be included in Schedule A worksheet table 1 or table 2. So those two tables that are in Schedule A, we just leave the owners out of that. If there is more than one individual, attach a separate table that lists the names of and payments to each, right? And so now we have to say, oh, hey, by the way, we have multiple owners. That's why we get to what we call table 3. And this line 9 in the instructions is pretty clear that we must not pay them more than is in 2019. So what we've done is just looked at our 2019 earnings here and pulled that in for that employee based on the payroll accumulations. And we've compared their annualized 2000 wages, and we've said, oh, we're going to limit it to that, or we're going to limit it to the 2.5 months worth of wages. So we've compared it to, in our report, we've compared it to if they were paid the 100,000, which is the limit, divided by 52 times 10, right? So we end up with a roughly $20,000 figure that we're going to compare their current wages to. So we're limiting out the owners separately on this report on table 3, which allows you to fill out that line 9. So this report will pull in both the earners that did not have more than 100,000, table 1, the earners that have more than 100,000 in 2019, table 2, and the owners, which is where you get the least amount of forgiveness for, is for the owners.
Question from Natalia. It's how are employees hired after March 31st counted?
Yeah, good question,
or are
Natalia.
They counted?
Yeah, they definitely are counted. So if we look here, let's go to the first page here of how I ran this report, 4/26/2020 to 6/14/2020. Anybody who had earnings during that time will be counted, if they're an active employee, will be counted here. And anybody who was given an offer, like we talked about with Skylar case, that where you've overridden the FTE will be counted. So if you've hired them before then, it will be counted here as your FTEs for this time. Now, if you're talking about when, how do we compare that to that? It's the quotient on page 4 of the SPA schedule worksheet, where FPA schedule A worksheet, that if you're looking at that quotient there, then you would include them in the numerator and exclude them in the denominator. Essentially, you're saying, hey, these are people who are new FTEs, and they weren't there in the first quarter of the year, so it helps us out when we're looking at a reduction. That's all. So if we go to the last here, we can see the average FTE, the total average FTE, and the FTE reduction quotient. And you can see I've checked some of these boxes, and so we end up with just a 0. So it's not a problem there. But this would all come in there. So that in this case, what you would end up with is you would have those people counted during the current period, but not for the reference period, or not for the period before that, which is part of the quotient. Good question, though. Any other questions? Let's see here. Looks like we have a couple of things Jenna's been able to answer. Oh, we had a question earlier from someone who was interested. That they said, well, what happens if I do want to run this for less than 24 weeks? My CPA says I can do this. All you have to do on this whole report is based on these parameters. So if you wanted to say we run it for 16 weeks, and from the accounting council you have, if you believe you can apply for this and your bank is allowing that, then you just simply put in 16 weeks worth of PRN dates, and you calculate your earnings limits, just like I did here, where you would do 100,000 divided by 52 weeks times the 16. And this report will work just fine. There will be no complications with this report based on that. All of our calculations on the 8 weeks versus 24 weeks are based on these two things and this report. So that should work just fine for you. Penny, is SUTA accrued during the period but not paid in the cover period counted? Yes, so all payroll related costs, the SBA clarified this, all payroll related costs are the things that are accrued during that time. This is not true for the mortgage interest and the rent and utilities, but it is true for these payroll related costs, the stuff that is accrued, and it can be reasonably attributed to the time worked on these payroll ending dates. And again, I would like to refer you to the SBA FAQs, one of the later ones on that one. We have several earned codes, so I can tie them all into this report, right, Holly? Yes, that is absolutely true. So you can see here, this is Hillary Ponder got salary and a bonus. Both of these people got their earnings here. If we go to here, we go to somebody else, we have regular earning and this intermission hourly. So they had 3 earning codes and they were all tied in. All of them were allowed. If we go to somebody who had COVID, we have the regular and the bonus, and we had the caretaker, so we have 4 earnings codes that they were paid during this time, but only 2 were allowed. So yes, absolutely, that shouldn't be a problem at all. Good question.
So question on the report launcher, and sorry. What should go in that reference FTE box that I see on the launcher? That's that last one at the bottom.
This reference FTE is so that's related to the question that we had. Good question. The average FTE for the borrowers Sean had asked earlier. This would be So for that quotient, if I put in that 9.1, let's just say, and I preview this, I think this is going to cause an issue with my owners because I pulled it in after the fact. I didn't type in my owners. So this gets pulled in, this 9.1 gets pulled in here, and this one was calculated. You can see my FTE reduction quotient is 1. So I had said to Sean, hey, Sean had asked, can we calculate this from this? And if my chosen reference period for this FTE safe harbor, if I can't meet my FTE reduction safe harbors for line 11, and this is the chosen reference periods is either last year or the first quarter of this year, I can use this report, calculate my average FTE for that period. Let's just say that I wanted to run it for first quarter. Maybe I can slow down and do this a little more slowly. I can run this for 1/1/20 to 3/31/20, right? I don't care about this because I'm not going to care about any of my earnings detail. I can leave this as 0 and I can preview this. It will come up with a number at the end of my table 2. That's my total for this period. Then I can come back and I can grab this number, copy it, rerun this for my chosen reference period, or my, in other words, the time that I'm asking for forgiveness for, 6/16/20, and I can put in that as my reference FTE here and preview it. That will allow the report to calculate. Oops. It allows the report to calculate the FTE reduction quotient here for you. So it's kind of a two-step process in the sense, if you don't meet these FTE reduction safe harbors, which I hope you do, I mean, between these 3 of them, I would guess 95% of you are not going to have to worry about this. But if you don't, then you calculate your FTEs, you put it in the parameter, and you run it in order to calculate your quotient. Jill, can you combine companies and run the report? That is not possible under the current, this current rendition. Right now is similar to what I answered earlier about the payroll groups. Right now, we only allow for a single company. That there's no reason that we couldn't allow for another company on here. It's just that it had never been requested, I guess. So if that's something that would make it easier, we can certainly do that before we would deploy to you. So one of the questions earlier was, can we have several earn codes? Holly had asked. The earn codes, let's see if I can find the earn codes, PR earnings codes. I'm inside of payroll programs, PR earnings codes here. And we have our PPP category dropdown. This is one of the things that we will allow you to grab. This is also showing up. This will also show up in your deductions liabilities, but we allow you to categorize this in, whether it's wages, medical, retirement, state unemployment, other state, local tax, COVID wages are not included. In other words, where should these earnings codes show up on this report? And part of what we'll do as we don't just install this and walk away, we'll help you walk through what actually counts as wages and what counts as COVID wages, et cetera. Obviously, we expect to be able to do the COVID wages based on the standard viewpoint setup, or if it's just not included at all, things like per diem, or maybe you guys have a special setup related to some kind of reimbursement policy through the earnings codes. Also, many of you that have been running on Viewpoint for a very long time may have negative earnings, like for some 401k things, because that used to be the recommendation. We would have to make sure that those were not included as well, or included as the retirement benefits. So this part of our script, and for those of you who do have IT and don't need the consulting, the script will install these UD fields for you, or for the IT department will be able to run the scripts and create these UD fields. Any other questions? We have about a little over 10 minutes left. Well, one of the things that we'll do, if you guys are interested, there is a way to sign up right on our website, silvertrek.net. I had pulled that up earlier. They have the we have information related to the payroll protection program right here on our main website. You can sign up here, and we'll schedule in a meeting to just get that installed for you. You can also pay right there if you'd like. Again, as a thank you for everybody who's purchased a COVID, you can use the cheaper, the lesser of the two number of employees. Also, for those of you who have previously purchased and are here to learn about it, thank you very much. I really appreciate your guys' trust in us. We'll be scheduling in, if Jenna hasn't reached out to you already, she will be shortly, to schedule the updated report and to walk you through how to use that updated report so that you can do that loan application forgiveness as soon as possible. She'll just get in touch with us. We'll get you scheduled in. And if you have any further questions, Jenna, myself, anybody else here, Justin, especially John Vinica, who was instrumental in getting this report done, that we should be able to help you. I'm sure that some of you have unique situations, two of which we've heard today, multiple payroll groups, multiple companies, that we would be able to handle those requests and make sure that these reports would work well for you. I certainly want to make sure that you guys are able to get the full amount of your forgiveness. Janet is asking if this webinar is available under the PPP webinar recordings. The answer is yes. We are recording this, and this will be sent out to you. It will also be available here, both this webinar and the one from previously. And the spreadsheet is available to everybody underneath the PPP documentation.
Michael, I'll be posting all that this afternoon, including that spreadsheet.
All right, perfect. Okay, thank you very much. I appreciate you taking the time, everybody, and have a wonderful day. If you have any further questions, just shoot us an email. Okay, thank you.